To keep things short, I sold off more than 50% of my stock portfolio. Stick around to find out why and what I'm going to be doing next. If you're new here, welcome to the channel. First off, let me give you a bit of context. Over the years, I built up a diverse portfolio by investing in ETFs which cover different sectors and industries, but I was mostly exposed to the tech sector. If you'd like to see my total portfolio, you can click the link on the screen to view my last video where I revealed my entire 6-figure portfolio. So while my stock portfolio has performed well over the years, and I started to see the compounding effects, I had to make the hard decision to sell off my entire TFSA and liquidate both of my taxable accounts. But the reason why wasn't because I was trying to time the market or thought we'd seen a possible top. My reasoning was because an opportunity of a lifetime came, where my neighbors asked if we, as in my family, were interested in purchasing their property before they put it on the market, and without a doubt, we were interested. Therefore, in order to fund the down payment for my contribution in such a short time period, because we weren't expecting to be in the situation to purchase a house, I had to look at my liquid assets, which is basically my stock portfolio. While looking at my various accounts, I had to see where it would be most optimal to withdraw funds from, and that's where I started looking at all my accounts across the board. My first thought was to sell the ETFs that I held in my taxable account at Questrade. The funds held in VCE and VDY were basically my emergency funds. And although yes, purchasing a house does not classify as an emergency, but my thinking was that I had probably built up this emergency fund more than I probably should have. And if anything, I can easily rebuild the funds afterward with my employment income. So although yes, this didn't classify as an emergency, it was a situation where I needed money. So I thought to myself this was the perfect time to use these funds. After my emergency account, there are some accounts that I could not withdraw funds from without taking some penalties, such as the RRSP and the FHSA. I couldn't withdraw money from these accounts because the real estate property that we were intending to purchase was not going to be my personal residence. So the criteria to withdraw from the RRSP under the home buyer's plan and the FHSA would not be applicable. As such, I couldn't touch these accounts or I would lose my contribution room for the future. After that, I was left with 3 accounts: my TFSA, my non-registered account at Interactive Brokers, and my CDR challenge account that I just started a couple of months ago. Now, a majority of my funds were in my TFSA, and I never thought I would have to use these funds so soon. My original intention for my TFSA was to let it compound over the years and then become a behemoth. I wanted to see my annual dividends in the 4-figure range, coming in tax-free, but things do not always go as they were planned. I had mixed emotions thinking of selling off my investments and withdrawing the funds from my TFSA, since I spent about 4 years building it up, and it was nice to see the current prices well above the average price. Also, my returns were 30 to 40%. But after some thought, I came to a realization that the purpose of the TFSA is to let your money grow and compound tax-free. But what's the use if you never plan to use that money? And now everyone has an opinion on what the best use of their money is. But for me, using the funds to purchase a real estate property hits our criteria of it being for good use. I also kept asking questions to myself. Why would I continuously invest and contribute money into an account and not reap any benefits from my investments? Am I seriously going to wait until I'm 60 to 70 years old when most of my life has passed by to use this money? And then I remembered. The reason why I started investing at such a young age was to become wealthy, and this opportunity of investing in real estate would put me on to the next step of the ladder. And that's the thought that got me over the hump of selling off all my investments in my TFSA. It was that I was selling my smaller investments, my ETF holdings, and putting it into a bigger investment, real estate. Therefore, I was completely content with depleting my entire TFSA. The next place I looked was my account at Interactive Brokers. Now this account was easy to justify withdrawing funds from, since this account was used for more short-term investments and not long-term like my TFSA. So with my non-registered USD account, I withdrew as much funds as I needed for my contribution for the down payment. And with doing all the calculations, it came out to me withdrawing $36,000 CAD. I could have withdrawn more if I wanted to, but I wanted to leave some funds in this account because I believed I could still generate good returns in future short-term investments. So for this account, although the portfolio was pretty small compared to the other accounts, and the funds would have a minimal effect to the contribution of the down payment, I decided to sell the CDRs in this account and withdraw the funds completely out. This decision was not just to get the money for the down payment, but the main reason was because now that my TFSA is completely empty, I can contribute the amount that I was going to fund in the CDR challenge account into my TFSA, and then receive the tax-free shelter growth. So I basically no longer have a use for this account, and I most likely will be closing it. And there you have it. With all the withdrawals, I have taken out about $95,000 exposure to the stock market. Now we gotta look ahead to the future. I now have the opportunity to rebuild my stock portfolio. It now feels like I have the upper hand since now I have years of experience and knowledge in the stock market. So I will be better prepped when I build my portfolio. Things I will be considering when I rebuild my portfolio is tracking which ETFs have performed well and which ones have underperformed. Also, since I started investing back in 2020, there's been an introduction of new ETFs as well as new ETF providers. So I will be doing a complete analysis of which ETF I want to invest in. I'll also need to look at my investment objectives, my time horizon, and my risk tolerance, since it has changed from the last time I built my portfolio. I'll most likely be adjusting my allocations that I had before. Previously, I was heavily invested in the tech sector, which has been known to be more volatile. I want to place my money in more safe and reliable investments. Not saying the tech sector doesn't have safe companies, it's just that I just want to have more stable returns. That reminds me, the market conditions. We have seen quite the rebound since the lows of 2022, and we basically have been taking the elevator up with the AI sentiment in the market. So I'll need to assess the overall market environment and see which specific sectors or industries show the best potential for growth at this time. As of right now, my plan is to dollar cost average back into positions, as I don't really have funds for a lump sum. Another thing that I do want to be looking at is investing in an international ETF. This is something I did not have exposure to in my last portfolio. The only markets I was exposed to was Canada and the United States. So I definitely want to be more diverse. Also, now that I'm starting from scratch, I gotta stay focused on long-term goals and avoid making impulsive decisions based on short-term market fluctuations. Since we're basically starting from step 1, stay tuned in to see how I rebuild my portfolio. I want to let you all know, whoever's watching, to take some notes and get some inspiration on what I'll be doing. You're in the perfect place if you never invested before, because we're both starting from the beginning. So if you ever want to learn about the stock market, or you've been waiting for the perfect time to get in, well, this is it. It's all about execution, and I want you to take the next step forward with me. Making mistakes along the way is okay as long as we learn from them, so don't be scared. And if you have any questions, please feel free to comment below and I'll happily answer and hopefully steer you in the right direction. If you enjoyed this video, give it a thumbs up, I'll appreciate it. And subscribe to stay tuned to see how I rebuild my portfolio. Until next time, stay locked in.